If you have never dealt with finance or just starting out, then this video will be very important to you, as it will show you the right points you need to know when it comes to your finances. Hi folks, this is Björn from Becoming Financially Independent, where I will help you to understand more about finance so you can make sound financial decisions by yourself. I will upload practical videos every week about personal finance, saving and investing. So maybe consider subscribing. First, let's take a look at what you have to consider if you want to take care of your own finances. So the first thing you have to do is look at your current financial situation and analyze it more closely. And how we are going to do this? Well, start listing all your assets so that you have an overview of how much money you have in your checking account and in your savings account. If you don't have a checking account yet, please open one. Do you have life insurances or a private retirement plan or other assets? List them as well. Or on the other hand, do you even have debts or liabilities such as a mortgage or a student loan or an auto loan and so on? Please write them down as well. So what you are actually doing is you are just balancing what you have of what you owe. If you now see that you have debts, it is of the highest priority to reduce these debts and to repay them so that you pay as little interest and compound interest to the bank and get a positive balance sheet as quickly as possible. Now that you have an overview of your finances, the next step is to clean up your financial situation. So analyze all contracts and cancel those that you no longer need. Check your insurances for your car, for example, or best of all, think about whether you even want or need a car at all, or an old cell phone contract, a life insurances that is no longer profitable. Or are you at the bank where you have to pay account management fees? If this is the case, find out which online bank there is in your country and what conditions they have. Not that you are at a bank like Wells Fargo, just saying. And if the people are interested, just Google for Wells Fargo account fraud scandal, right? And since online banks are generally cheaper and usually even free of charge, I would always go for an online bank, because even if you pay just $10 a month on fees, that piles up over the years, and this is money you could have actually invested and received dividends from it. So instead paying money, you are making money. Or you may still have some securities or other investments in which you have invested a long time ago, but which have suffered a large loss and which you have not yet sold. This tidying up phase can certainly take some time, but the goal of this should be that you no longer have any papers floating around and you don't know exactly what it is and whether it is profitable or can be terminated. The next step is to set your goal, or what you want to achieve financially and when. For example, if you want to save up for a pension, or you want to put money aside for when you are retired, or to finance your children's studies, or simple expand your portfolio, which gives you a passive income generated from dividends. Therefore, it is important that we define our goals in time. So this would be short-term, medium-term and long-term goals. Short-term goals are, for example, a vacation or a new car, a motorcycle, a bicycle, or name it. Medium-term goals are, for example, further studies if you want to continue your education or want to buy an expensive car like a BMW. Or in my case, to have an awesome wedding on the beach. Long-term goals are, for example, financial freedom or a house or an apartment where you can live in old age without having to pay a rent. In the financial world, we call this a financial plan, which means you must determine how much money you have put aside each month in order to achieve your financial goal. And to do this, you take your income first and then deduct all the costs you have and then look at the maximum savings rate you can have. With the help of the savings rate, you can then work and see whether they fit your goals. Now we have two approaches. First, if the savings rate is not high enough to achieve your goals, you either have to lower your goals, or second, find a way to increase your savings rate. That works by simply earning more, increase income, or spend less. The next step is to automate your savings, because many people save the money that is left over at the end of the month, which is by then usually no longer available. So it is important that you automate your savings, and that is exactly the day on which your salary was transferred to your account. So after receiving your salary, you should transfer the money you want to save directly to a separate account, a savings account. Since at the end of the month, and we all know that we mostly have no money left because we have already spent it on other things. That's why it's so important that you pay yourself first and you save first. The most important recommendation from my side is, every time you are going to buy something, think about if what you buy brings you any more value in your life. Or is it just another thing you have already 100 times at home or in your closet and you don't really need it? In any case, transfer your savings to a separate account or a separate deposit where you have no easy access to it. If you have already saved a few months, then we come to the next step, building up your emergency fund. Because before you start investing, it is very important that you have this emergency fund. That is the first financial goal you should set yourself. And it should be between 4 and 6 net monthly salaries. With this money, you will definitely not get rich and you will not achieve enormous returns. But it protects you from taking a loan from a bank in unpleasant times when shit hits the fan. For example, your car breaks down or you lose your job. It also shows you that you have already learned to deal with money and save more than at the beginning. And for me, it is a great motivation to see how it becomes more each month instead of less, like before. Another thing, let me know in the comment field below what topics you are interested in to see next. But let's get back to the topic. Congratulations if you have mastered all these steps so far, because from now on you are debt-free and have built up an emergency fund. Now you can start investing to meet your financial goals. And the best way to do that is by investing in the international stock market. One of the most important steps in investing is, first of all, define a strategy. And with this strategy, if you ask experts, you will probably always get to know different investment strategies. And that can be really confusing, that you no longer know in what to invest and where to start. Well, but leaving the money in the account is of course not an option, because you don't get any return here and you don't even compensate the inflation. The international stock market offers an excellent mix of opportunities and risks for your investments. Of course, there are fluctuations in value and risks when investing in the stock market, but you can reduce this risk by diversifying, which means dividing your money into different stocks or in an index fund, or invest in an ETF, in an exchange traded fund. Videos regarding the different types of funds are coming soon as well. Back to the topic. So if you do not have much experience, then you can start with small amounts and gather first experiences. After, when you feel comfortable, you can invest larger portions of your savings rate in the stock market. As a final note, I want to give you that it's important that you take your time with your finances. That means you should not rush anything and not follow the first investment strategy you heard about. So work out your own personal strategy, because a strategy change means when you switch from one investment strategy to another, that is usually very, very expensive, because fees and transaction costs are incurred every time you buy or sell. As well, learn everything there is to know about finance and what is important for your investment strategy. If you liked the video, give me a thumbs up and subscribe to this channel so that you don't miss another video, because I always upload videos about finances here every week. Thanks for watching, focus and don't get greedy. See you next time.